Someone asked me like, ma'am, please make a video on investment. Like if you are earning some amount, we have to save some amount. We can do some investments. What exactly the procedure to do some investments? So here I am with the video today. My name is Nazia. Welcome back to my YouTube channel. Here we have Vishwajit here. So he is the financial advisor. Whenever we want some advice financially, whenever we look for some policies or something, we'll just contact him. He is the right person for us. So I have written down some questions here as usual in my diary. So I'm going to ask one by one to him. So he is going to answer all of your questions, whatever you people have been asking me. So according to that, I have written down the questions. A few questions I have written down. Might be in next video, if you people like this video, if I get some good response, then we'll make some more videos as per that. Okay, so one by one I'm going to ask you the questions. So I hope Mr. Vishwajit clarify all your doubts in today's video. Okay, so let's start with the video now. So my first question is like best coverage for a primary owner. Let's say we have the family member who is earning some good amount. So what will be the best coverage for him to his family?
Ma'am, as per the financial planning, what happens is, let's take an example, somebody, the main person who's earning for the family, right? He is the sole breadwinner of the family. Okay. So we have in insurance industry, we have a concept called income protection plan, right? So what happens is, why we call it income protection is, let's say Mr. Raj is earning for his family, and if something happens to Mr. Raj, okay, so he was earning around 10 lakh rupees. So who will provide 10 lakh rupees to his family, right? So in that way, as per the financial rule, whatever annual income you are having, at least minimum 15 to 20% times, 15 to 20 times you should have a coverage, multiple of 15 to 20 times. Okay. So let's take an example, somebody is earning 10 lakh rupees, and if we take 20 times multiple coverage of that, so it comes to 2 crore rupees. So okay. why we introduce, why we focus on this object is, let's say something happens to the person, right? So the family will get 2 crore rupees in hand. Okay. So when they invest that in any FDs, right, fixed deposit, so which is a secured investment in India, we call it. So when they invest that 2 crore rupees with at least minimum 5% of interest rate, they will at least get 5% of 2 crore will be 10 lakh rupees for their survival of the family.
If they do FDs.
Okay. So if they get a insurance amount of 2 crore and they deposit that in a FD, then that FD will yield a person of 5% with which will be generating an income of 10 lakh rupees every year for the family. Okay. So the family is the standard of life that they were living when Mr. Raj was there, so that will continue even in absence of Raj.
But that is coverage like after death or after disability, or only after death?
It's only after death, ma'am. That's actually pure protection, ma'am. That's why it is called income protection. So in case Mr. Raj is not there, the insurance amount or the company will, the insurance amount that will be given, that can be a way for the income source for the family. Okay,
do we have any like minimum this much amount we have to pay every month, like Raj has to pay this much amount till he was alive?
It depends on the person's age also. Let's say somebody is below 30 years and they take a coverage of 2 crore, then hardly, if you various insurance company will have various premiums. But if we talk about LIC, where it's India's largest insurer company and which gives sovereign guarantee from Government of India also, here the premium will be somewhere around 22,000 rupees for 1 crore.
20,000?
Yeah, 20 to 22,000. It depends on the financial underwriting again.
Per month or per year?
Per year.
Per year 20,000. Okay.
Yeah, approximately. So somewhere from 20 to 25,000 for a 30 years old person will come for 1 crore. So for 2 crore means it will be somewhere around 40,000.
If the age is like more like 50 or 60, like
so if the age is more, then the premium will go high, and 60 age ke above means we cannot give term insurance.
Okay, then what will be the minimum age for this term
for insurance? Pure term insurance, if somebody wants to buy, minimum 18 to 65 age.
After 65, no?
No term insurance for that.
Okay, if we plan to give some more premium, then also it is not possible?
It can be possible, but again, like there arises, the premium will be really high. And also it depends on the person's financial standard and also the health conditions, right? And if the person is having any kind of health issues, then the premium loading will be extra. So when it comes to term insurance, it is always advisable to buy at the early age, so the price will be less and you get a higher coverage.
Okay, and any minimum age like from 20 or 18 like that?
From 18.
18.
From 18 years.
I hope this question answers clarifies to you all. The next question would be, what will be the minimum investment required if you are earning some good amount or some least amount also? What will be the minimum and maximum investment should be there?
Ma'am, it depends on the financial goal of the person. Let's say a couple is married, right? So they will have two types of goal. One will be a short-term goal, where if they are planning to buy any properties after 5 years, or if they want to purchase a car for the down payment and all. So that is one short-term goals, and they have a long-term goal also. Long-term goals means like they might have a kid of 1 year or 2 years, right? And if they want to give them to the higher education, and for the child's marriage, and also for their old age pension. Nowadays pension is something which is very much important, right? Even in government job also we don't get a pension, so it is better to secure our future also.
Yes.
So when we talk about long term goal and short term goal, there is a calculation.
Okay.
So whatever a person earns, there will be some compulsory expenses which they cannot avoid, like let's say household expenses, EMIs for their existing loans and all, right?
Yeah.
And obviously for their lifestyle, they have to contribute for their survival.
Do you have any exact figure like this much should be contributed to household, this much should be contributed to your lifestyle?
It depends on the person's standard of living also, ma'am. Okay. So but there is a there is a calculator where at least 30% should go for your household expenses, 30% for your EMIs, bike, car, and whatever you have, and 10% should go for your lifestyle, the other things and all, and at least minimum 30% should be your savings.
Okay.
So as I mentioned, in 30% there will be a dividend division on 30%. As I mentioned that there will be short-term goals. For short-term goals, at least 10% should be for your short-term goals, and then come the long-term goals. So long-term 20% should go for the secure bucket. Why we call secure bucket is, let's say somebody is planning for the child's marriage, okay, and they are investing in any risk bucket. Risk investment comes under mutual fund, shares, and other things, right?
Mutual fund comes under this risky part.
Yes.
But I heard people saying mutual fund is something which is safe, as stocks is something which we have to invest and we have to take the risk.
Correct.
Mutual fund is something which we don't have any risk in that. There is some low risk in that.
Yes, in that also there are few categories of mutual funds where you get debt fund, equity, growth funds and all. So when you go to the growth funds and all, which is the 70% which is invested in the equity market, so there it is little bit risky part, because with the COVID scenario, we have personally experienced a few funds which were giving minus of the principal amount also. Even I had a client whose mutual fund was performing more than 15% in the past days, but during COVID time it was giving around minus 10%, 10 to 15% of his principal invested amount. So that means, let's say somebody is planning, even though the market will go up after few months, but let's take an example, somebody is planning for the child's marriage, okay, and they are investing in some risk investment, okay, and what happens is after 15 years, we never knew that COVID would have come, right? So after 15 years something happens, and there might be economic crisis or anything can happen, and at that time if the person is not able to withdraw the fund when the fund is actually needed, and if he is withdrawing also, he is in loss, right? So he will be in dilemma whether to withdraw or not.
But that time what he can do, he can keep his money as it is, and after some days, after some years,
he can do that.
Then there won't be any risk, right?
There won't be any risk. He can do that. But why we say is, at least 20% of your income should go for secured savings. Okay. So secured savings means, let's say tomorrow 20% you have a secured. At least you are aware that I have this amount with me. No matter tomorrow if the market is going down also, this is safe for me.
Yes.
Right. And and what happens is, if the market is also down, you have this amount safe with you. So we are not saying that put all the money in the safer bucket. It is like the Warren Buffett, the most renowned financial he is the multi-billionaire.
Yes,
right? So he has said that don't you should be diversifying your funds, right?
If something goes also, we should not get affected by
yes. So it should be diversified. It should be in the risk bucket also. You should play with the market. You should do investment in real estate properties. Everything should be there. But it should be properly what do we call that, properly arranged, distributed. Okay. So that if anything goes wrong also, at least you are having some secured amount,
Yes, yes,
where
got it.
you know, like you will be able to survive at that moment.
Yes, got it. Okay, fine. So what exactly the conclusion? Minimum and maximum investment?
Minimum should be at least 30%.
Okay.
And the more you save is obviously good for you.
Okay, minimum should be 30%.
30%.
Okay, fine. Got it. So the next question is the plan. If anybody wants to get married in another 3 to 4 years or 5 years, there is any like LIC plan for them?
Generally talking, with LIC we have plans which fits all the requirements of the client. But when you look for the retirements, returns and all, right, when for the 5 years plan, we have also got a few plans which is called ULIP plans,
Okay.
where you can withdraw the fund, but again it depends on the market.
Okay.
But if you need something guaranteed one, then at least minimum 10 years should be the investment, where you get a guaranteed secured amount.
This ULIP one is how it is?
It is similar as mutual fund.
It may go up, it may come down.
Yeah, it may go up, it may come down, but how it is different than mutual fund is, in mutual fund you don't get risk coverage. Here you get additional 10 times, like whatever you are paying, additional 10 times risk coverage you get, and it works similar to mutual fund only.
And for higher studies also similarly?
Yes, but it depends. Again, let's say if you want some secured investment for your child's education, let's say somebody is having 1 year old kid, and they want to give the financial planning for the education, right?
But
then we have dedicated plans for that.
That is you are telling for child or kids.
Yes.
But I am telling, let's say I have completed 10th now. Now my parents want to invest something for me for my higher education, like after graduation they want me to send to some foreign countries, so they want to invest something only for 5 to 6 years. So for them, any plans is there? Guys, that's it for today's video. In upcoming video we are going to discuss more about what exactly the higher education plans, and also the difference between mutual fund stocks and FDs. And also I have asked him about best mutual fund stocks and FDs, which is the best, okay, among mutual fund stocks and FDs, which will be the best, and best ever LIC plan from past 5 to 10 years. And also lastly I asked him about to save the tax, which plan to choose and how much we can save the tax using that plan. So all these things we are going to discuss in upcoming video, so please stay tuned with this. This is the part 1. Part 2 is coming in another 1 or 2 days. I hope you guys found this video informative. If yes, just do let me know in the comment section. And if you have any question related to investments or policies or anything, please do let me know in the comment section or in my Instagram, so that we can get clarified with him. Okay, whatever the doubts you have, whatever the questions you have, please post it. I can ask him, and we can make the parts for these videos. We can make the complete series for investments itself. Okay, whatever your doubts is there, please do let us know. And next part is going to come soon, so stay tuned with us. Okay guys, I hope you found this video informative. If yes, just like it, subscribe it if you are new to our channel. Okay, thank you so much for watching. Bye bye.